So the greenback has never been positive or negative for two consecutive presidential cycles. So if we look at the presidential cycle since Nixon, the performance or the direction of the dollar changed with each new administration. So since Bush Sr., all three following Democrats have been positive for the dollar, and all three Republican presidents have been negative for the dollar, meaning that while a Trump presidency, as you might hear, would be good for the greenback in the short term, the long-term implications are much less clear than you would expect.
This is Converge,
a podcast from Convera.
Come with us as we shape the future of finance.
Welcome back. It is October 10th, 2024. Another Converge Market update and a really special one today. We're excited to be releasing a U.S. election guide that will be helping investors think about the upcoming U.S. election. It's less than a month away, and the impact on markets is arguably probably one of the most significant in recent years. And it's arguably one of the most important political events of the year overall, most certainly, as I said, for investors. So before we dive into the specifics and the implication for markets, it would be good to first establish what's being voted on and why it matters so greatly for all of us. So Boris, tell your humble American friend here, what is so special about the U.S. election from a macro markets perspective?
Yes, pleasure to be back, Alex. I think that is a great initial question, and I think the answer has two distinct parts to it. So for starters, the U.S. economy, of course, is the most important one in the world. It makes up around 25% of world GDP. U.S. equity markets hold around 65% of global equity value, and the treasury market itself makes up a staggering 39% of the total outstanding debt overall. So you see, it would be really foolish to think that one could just separate the US from the world economy and vice versa. Anything happening in the United States, be it economic and monetary nature, like with the Fed, but also political, will almost by definition impact the rest of the world. Now, why is the US election such a spectacle? I think that is a bit of a different question, because part of it is the early start of the campaigning in the US, which is a bit unusual for most developed economies. The race effectively began after the 2022 midterms, when Trump announced that he's running. So most Americans actually believe that the campaigns are way too long, but the need for fundraising kind of incentivizes that early start. So in a sense, you have what some described as a permanent campaign going from election to midterms to yet another presidential election.
Yeah, got it. So the U.S. economy and its markets matter obviously a lot for the rest of the world, given their weight and importance. As an American, I would definitely subscribe to your second point, this notion or feeling that the election process goes on forever and ever and ever. So the other question that is maybe important for our listeners outside the U.S. would be, what is actually being voted on? It seems simple, but there's quite a bit of nuance hidden in there as well. Can you sort of flesh that out for us?
Yeah, that is right, Alex. I think the media focus and public attention mostly fall on the headline presidential race, as you know, in which the new administration and highest appointed official of the country has been voted on. So in the case of the upcoming election in a month, it's between the current Vice President Kamala Harris and former President Donald Trump. And to be fair, the president does hold a lot of power in the US, unlike, again, many developed countries. The president can veto bills, he or she can nominate cabinet members and Supreme Court justices. So he or she basically sets the tone for foreign policy as well. But as in any democracy, the executive branch of the government is not ruling alone, as you know, and the legislative branch is being voted on as well in 27 days. So all 435 seats in the House of Representatives and about a third of the 100 seats in the Senate are being voted on. And all three of these bodies, the Senate, the House, and the presidency seat, are important in one way or the other. Congress is actually more important when it comes to the big ticket items. So presidents themselves can't declare war, they can't make new laws, they can't decide how money is spent without the approval of Congress. So in a sense, while the presidential race is front and center, the composition of parliament is, I would argue, as important, if not more, than the presidential race itself.
Absolutely. So I think it's just easier to promote the presidential candidates given that there are so few of them, especially if you compare it to the 500 seats needed to be filled in both chambers of Congress. So that probably resonates more with people. But speaking of people, what is the current sentiment like? I mean, I'm on the ground here. It's wildly polarized. But what are the polls telling us, really, from your view as a European sitting across the ocean?
Yeah, absolutely. I think what we do know is that the presidential race is incredibly tight and essentially too close to call at this stage. Harris has been on the rise in the polling ever since she officially became the Democratic nominee. But over the last, I would say, 2 to 3 weeks, Trump has gained traction again. And of course, ever since 2016, US polls, but polling in general, I would say globally, have somewhat of a bad reputation because neither Brexit nor the Trump presidency have been favored to happen according to the survey. So, of course, people are on the fence when it comes to these predictions. But using the famous 538 website model, tracking several election polls, I think Harris does seem to have a lead of around 2.6% as it stands right now, which is, I think, important to mention, down from around 3.6% about 6 weeks ago. Another method of gauging who is likely to win the election is not to look at what people tell us, but what investors put their real money on. And if you look at the two most famous prediction markets, it's predicted and polling market. And according to those, the Republicans are expected to take both the White House and the Senate. Trump has a 53% winning chance, and the probability of the Republicans winning a majority in the Senate is about 73%. The House of Representatives, the lower chamber, is more seen as a toss up and more of an open race. But this is why a blue sweep, for example, is less likely or seen as less likely versus a red sweep because the Senate most likely will go to the Republicans.
Interesting, and I mean it's an understatement to say polling has been questionable in the past several years in terms of its accuracy. So it'll be interesting to see if they can redeem themselves this time around. But now that we have a general understanding of why the elections matter, what's being voted on, and how the surveys look, let's get to the most interesting aspect for us, which is markets and market volatility. Reading the Converge US election guide, which is launching today, I was really struck by 3 risks for markets you mentioned going into the election. Give us a quick summary of those risks.
Yeah, sure. So as you said, the outline, the 3 specific risks that investors have to keep in mind when it comes to the elections are more broad in nature. So the first one is that both the S&P 500 and the US dollar have outperformed their historic average performance during the current presidential cycle. So equities are up 52% since Biden took office. This is versus their mean of 35% in all presidential cycles since the 1950s. If you turn to the FX side, the US dollar is up 14% versus its 1% average gain. So it doesn't seem like much, but the Biden presidency has been the third best presidential term for the greenback on record. So one risk, of course, that comes with that is that those asset classes that have outperformed essentially their average could correct lower given their stretched positioning. The second risk relates to the US dollar specifically. So the greenback has never been positive or negative for 2 consecutive presidential cycles. So if we look at the presidential cycle since Nixon, the performance or the direction of the dollar changed with each new administration. So since Bush Sr., all 3 following Democrats have been positive for the dollar, and all 3 Republican presidents have been negative for the dollar. Meaning that while a Trump presidency, as you might hear, would be good for the greenback in the short term, the long-term implications are much less clear than you would expect. And last but not least, our third risk, or I would say advice to our investors and clients, is not to put too much emphasis on the initial market reaction following the election, because the dollar reacted positively, as you know, upon the Trump's victory, and it fell after Biden won in 2020. But if you look at the performance over a year, or especially over the whole 4-year term, the dollar's performance completely switched, and Biden was actually positive for the dollar, and Trump was negative.
Yeah, interesting. So it's obviously good to have a longer term mindset when it comes to performance. And it's hard to do such things in today's always-on media environment where things are changing on a daily basis, it seems. So just to recap, we essentially have to be aware about the valuation of markets, the potential for a dollar regime shift, and we need to keep in mind not to judge the initial response to the election outcome. So when it comes to the two candidates more specifically, who do you see causing, I guess, overall more distress or more turmoil in the markets?
Yeah, well put, Alex. As you implied, I think the risks I've outlined are more broader risks associated with the election overall. When it comes to Trump and Harris, there are additional candidate-specific risks we have to keep in mind. I think it is fair to say that the budget deficit that everyone is talking about will likely remain high under both candidates, and the national debt debate will continue to be held over the next 4 years, no matter who gets elected. What could limit government spending, and this is where things get interesting, would be a split Congress. So, meaning that if the parliament is divided and no party holds both chambers of the parliament and the White House. And as I said earlier, this would likely limit the disruptiveness of the policies being implemented. The high volatility scenarios that we talk about in the guide as well are kind of reserved for a red or a blue sweep, respectively, which is when one party controls both the executive and the legislative branch. And a win for the Democrats here, for example, would come with stricter regulation for example, financial services, stricter regulation for the commodity space, while on the other side, Republicans would cut subsidies for renewable energy. And I think the goods and the tech sector would also suffer just purely because of the higher tariffs on China and the rest of the world. FX markets, for example, would also have to come to terms with high inflation under Trump and more regionalism as these industrial policies are being implemented. And I think this would have severe implications for many emerging market currencies.
Interesting. So these different policy recommendations would, of course, lead to different market outcomes. As you pointed out, you referred a lot to the US dollar and the potential impact from a Trump or Harris presidency. George, you've been sitting on the sidelines. Let's bring you in for a second here. George is sitting in the UK. For the remainder of the episode, let's focus on the FX side of things, which is your expertise. George, how could a new dollar regime actually look in the realm of FX?
Hey, Alex. Thanks for having me back again. So firstly, I think just to reiterate what Boris said, that the dollar's never been positive or negative for two consecutive presidential cycles. Therefore, given its huge appreciation during Biden's term that we've seen, it may just be that over the next 4 years, the dollar weakens no matter who the next president's going to be. But no, I think while the policy narrative and the proposals that we know of could have binary dollar implications, we're also cautious or conscious that the dollar historically reacts differently in the short term versus the long term, as Boris pointed out as well. And the composition of the White House and Congress is going to be key too, based on the ease at which these policies can be implemented and therefore their impact on the currency markets in the future. So I think it's important to walk through some scenarios that could unfold and what initially the short-term market reactions might be. So firstly, if we think of a split Congress under either Harris or Trump, we see this as more of a limited impact on markets. And the focus would therefore shift back to the economic growth outlook and monetary policy. But in this kind of scenario, the limited Trump scenario, we think would still be the more impactful one for markets versus Harris leading a split Congress, given the president's power in shaping diplomacy. And then we've got the clean sweep scenarios, and they present the large tail risks. So a red clean sweep, that would be the most volatile situation. Again, as Boris pointed out, this will be the most beneficial outcome for the US dollar in the short term, that is. And that's due to Trump's pro-growth, loose fiscal policies and his tough trade policy stance as well, because these policies are seen as inflationary, keeping the Fed rate cuts in check, and it probably sparks some risk-off flows as well. So the dollar's going to benefit in this scenario by its high growth, high yield, and its safe haven appeal. And in this kind of scenario, we do see the risk of euro against the US dollar falling to below 105, potentially even towards parity over the year. The other tail risk, of course, is a Democrat clean sweep. It's the most unlikely scenario, but it is one that implies a greater fiscal tightening, potentially boosting the case for more aggressive easing from the Fed, and therefore presenting the biggest downside risk to the dollar in over the course of next year, potentially seeing euro dollar trading above 115 or even into the 120 realms.
So, what about longer term implications? You and Boris have both mentioned that while a Trump presidency would be good for the greenback over the short term, the longer term implications are less clear. What's your thoughts on that?
Yeah, exactly. As I mentioned, under another Trump win, although the trade policies might be deemed cyclically positive for the dollar in the short term, via a longer term structural channel, it might actually become a more bearish or negative scenario for the dollar. And this is because more isolationist policies, like whacking huge tariffs on countries that want to move away from the dollar, for example, that could actually add to the de-dollarization story, accelerate that narrative. And plus, Trump has been pretty vocal about wanting a weaker dollar, as we know. And therefore, there's going to be a question mark around the Fed's independence, especially when we know that the current Fed chair, Powell's term ends in 2026. So if Trump appoints a new dovish chair, then the monetary and yield-driven dollar narrative, that could turn negative over the longer term of a Trump presidency as well. And it's also important to note, Alex, again, as I think Boris did, that it is statistically significant, this relationship that we have between the US dollar and US presidential cycles, that shows that the dollar does tend to do better when the Democrats are in power over the whole 4-year period. So it's certainly a case of not just looking at the short-term implications, but also the longer-term implications as well.
Understood. So to summarize, a Republican win might be best for the dollar in the short term, but a Democrat win might be better for the dollar in the long term, which is interesting. So extending the analysis beyond looking only at the dollar or Euro USD, I imagine the impact will be far-reaching and will include other currency pairs. Where do you see the biggest risks?
Yeah, for sure. Again, I think a Trump presidency is going to have the most impacts or negative impacts for markets overall. And this is going to be mainly via the risk and trade channels. If you think back in 2016, we had those currencies with a strong correlation with risk sentiment, that they are the Australian dollar, Canadian dollar, the British pound in the G10 space. They saw their correlation strengthen with global equities. So the correlation coefficient spiked even higher. And that was during Trump's presidency. So these so-called high beta currencies, which are sensitive to global risk appetite, became even more sensitive under Trump. And those are currencies that are sensitive to trade risks as well, are vulnerable under a Trump presidency. And this could be directly through the increased tariffs that are being proposed, obviously on China. That would hit the Chinese yuan and other Asian FX, or even the Mexican peso under universal tariffs that are being touted as well. So there's that impact, but then there's also the indirect impact of these trade policies, through reduced global trade, potentially weighing on commodity prices via reduced exports, and that hurts commodity-linked FX in the G10 space, like the CAD, Aussie, Kiwi dollars. But even if you look at your emerging market currencies, like the South African rand, the Brazilian real, they'd be hurt as well. Whereas a Harris victory, that would probably come as a welcome relief for these currencies. And then finally, you've got the monetary policy impacted to consider as well. As we mentioned, Trump's fiscal loosening, leading to less Fed rate cuts over the next year. That will widen the rate differentials in favor of the US dollar as well. And that's going to be particularly troublesome for low yielding peers like the Japanese yen and the Swiss franc there. So, there are various channels through which groups of different currencies are going to be impacted in several different ways.
Great stuff. Well, George, Boris, thanks again. I just want to remind our listeners that our U.S. election guide for markets is launching today. You can find the link in the show notes. Please check it out if you want to have a recap of some of what was discussed, as well as go a bit deeper on some of the implications on the markets for the U.S. election coming up, which is undeniably one of the most consequential in our lifetimes for sure. So, George, Boris, we'll check back in a few weeks and appreciate your time. As always, keeping an eye for us on the markets, and we'll see you next time.
Awesome. Thanks for the invite, Alex. Always a pleasure.
Thanks a lot, Alex. Okay.